Those who are not regularly in touch with BCAs, especially CAs, I would request them to visit BCA's website and spend a couple of minutes to gauge the scale of programs and events for professional development which BCAs has to offer. This will provide you insights on what you will be gaining by being part of BCAs as a member. BCAs is not restricted in sharing knowledge to only CAs. For all who are non-CAs, I would request them to subscribe to our prestigious BCA journal, which is considered to be of immense value for understanding varied avenues of professional pursuits. This year's theme for BCAs is ESG, Empowering, Scaling and Globalizing. Our endeavor will be to bring offerings which will cater to each aspect of the theme. Today's lecture meeting on evaluation of stocks, new economy versus old economy, local and global investing is aimed towards meeting the objective of scaling of our offerings by understanding nuances of investing, and thereby we as professionals can become more informed business advisors. I know one lecture meeting cannot equip us with enough knowledge, but the purpose of such lecture meetings is to open up our vision for the opportunities which can be explored as advisors. I am more keen to have such series of lectures for the young professionals who have many such avenues which, if brought before them, they can steer their energy in developing such skills. We all are reading a lot about the companies being referred to as one from old economy and from new economy. Well, the dynamics of economic activities change relentlessly and are dependent on shifts in technology, scientific developments, human resource development, and other factors. The companies which may be considered representing new economy at one point in time may be relegated to old economy when such companies are not able to keep pace with the changing times. It is important to distinguish between old economy and new economy stocks, since the two have very different attributes, risk profiles, and return potentials. Old economy and new economy stocks will usually filter into either the value or growth category. The international markets are also opened up for Indian citizens to invest. Investors are exploring the options of investing in companies listed abroad. This lecture meeting would also provide insights into opportunities and threats in global investing. Today's faculty, Mr. Kushal Thaker's formal introduction will be done by Anand Bhatia, but I would like to say a few words for him. Kushal is a dear friend of mine, and I have witnessed his growth from merely a fundamental and technical analyst to the level of being an international speaker. His passion cannot be said to be restricted to any class of assets, but he is so well conversant with equities, metals, agri-commodities, bullion, currencies, and also the new class of asset cryptos, that we are all in for a very enriching 90 minutes. He shall not be making any presentation and will conclude his lecture within an hour, and the balance he has kept for interaction. He shall be glad to deal with your posers on any asset class and try to give justice by enriching us on those aspects. And for this, I will request all of you to use the Q&A section to pose your queries, which will be moderated by us, and we will upscale it to be asked to the speaker. With these words, I will hand over the session to Mr. Mihir Sheth, who will introduce the speaker.
Thank you, Abhay. You could have not described what Mr. Kushal Thaker does in a better way, but let me have this honor of giving a formal introduction. Mr. Kushal Thaker, today talking to us from Chicago, calls himself specunomist because he speculates on the economy, and it's just not the speculation. It's a very well-researched work that really stands besides him. So he creates wealth-creating trading strategies. He indulges in commodity research, trading, and hedging strategies since 1996. He also offers accomplishable and concentrated guidance in stocks, currencies, and e-currencies and other innovative investment concepts. And how does he achieve this? Well, he has an expertise in value-driven approach in commodities, resulting in the ability to understand, discover, align, and control the value chain and the business processes in distinct segments. He has the expertise in analyzing and timing the global situations, rise and fall of various asset classes, and thus interlinking their impact on each other. He has the ability and expertise in trading in physical and futures and options markets across metals, grains, plantation, products, spices, and other emerging asset classes spanning across 18 to 20 exchanges globally, covering 60 agricultural and mining countries. As far as his education, training, and media exposure is concerned, he's been a visiting faculty at top-ranked management institutions across the globe. He has addressed the plethora of seminars, thus enabling money spinning and wealth creating opportunities in various asset classes across the globe without any boundaries. He's had the regular interactions through interviews and podcasts, spelling out trading ideas and strategies. And he's been a part of prestigious committees and government institutions for the educational purposes and betterment of the trader and investment community. We are all ears and we look forward to a very, very enlightening talk today. Mr. Kushal Thaker, I'll hand it over to you. Good luck.
So folks, let's get right into it without wasting time. As it is, we just have an hour to go. This being, I think, the fourth session that I am giving on this forum. And I always prefer to make it more interactive rather than I speaking a lot on it. Let me, for a few minutes, let me give a direction for about my mindset. And I'll just open it up for question and answers. And I really want you all to go back home with a lot of new ideas and hopefully be rich. So the topic has been very clear, old economy versus new economy. Now, if I look at it, considering at the turn of the century, we started having the dot-com boom. There were baby steps being taken in the software and the hardware technology and everything. Today, when we look behind, it seems like baby steps, but the strides have been so much in the last 20 years that we have moved into artificial intelligence, advanced data analytics, the fintechs have come up, the robotics are there, all kinds of disruptive technologies are there. And eventually, even today, nearly 50% of our life is driven by apps on our mobile phones. And eventually, I think our life itself is going to be driven or app driven, I can say. And all these technologies which are there, we need to adopt them as fast as possible because the changes and the more evolution and revolutions that are around the corner may make things difficult if we don't move with time. Now, looking at what people consider as old economy stocks, from, let's say, from cement to metals, to mining, to electric vehicles that are coming in. All these things now are the stuff that is required even for backing up for the production of the high tech and the software developments also. So what is happening is there is nothing like an old economy or new economy that is left. Everything is complementing and supplementing each other. In fact, what we consider as high tech and new economy is in fact helping the manufacturing industry, the mining industry, the trading industry, the logistic industry to become more efficient, cost efficient, increase their margins, becoming pollution free. And that is what is, everything has now become just one economy. And we need to keep on analyzing everything from up and down in all directions. Now, the introduction given by Mihirji has been, thank you very much for that. Most of the people who are aware about me know that my main forte is commodities. And in the last 3 forums, of the Bombay Chartered Accountant Society, I have always been mentioning that a person can be ahead of the curve if the analysis of the commodities is done. The reason is very clear that all the companies, again with the same distinction of new economy and old economy, if the commodity is not analyzed thoroughly, one will have difficulties in forecasting the earnings of any stocks. For example, if I'm looking at electric vehicle sector, and if I do not analyze copper and the rare earth metals that go in it, I will have a problem in analyzing which EV company I need to buy for a multi-bagger return. So in short, I need to analyze copper, I need to analyze lithium, I need to analyze nickel, which goes into their batteries. And if the price of these commodities go beyond a certain level, the earnings of that particular industry is going to always be in trouble. Looking at it currently also, from the time the EV technology has come in play, we have seen the prices of copper have already risen by 3 times. Some of the EV stocks have risen by 10 times. Wouldn't it be better that if you first trade in copper, make money in copper, because there is always a time gap between the movement of the commodity and the stock. And if you find any of the electric vehicle companies that are sitting on huge copper stocks at a lower price accumulation, the company becomes one of the best companies to buy because the margins are going to be very high. And of course, addressing a chartered accountants forum, the number crunching is supposed to be our forte. And that is how the analysis has to happen. Similarly, each and every commodity that goes into, let's say, the EV part of it, the 3 which I have named, copper, lithium, and nickel, once we are aware of the commodity, of what the commodity direction and the trend is up to, we can immediately look into stocks which are directly connected with the commodity itself. So where copper is concerned, automatically we need to look into the copper mining companies to invest into. Now here I need to bring out something that from last 15 years, whenever I say copper is a good buy, the only company that people tell me is, let's move into Hindustan Copper. Half of the Indian investors jump into it. And what happens is Hindustan Copper Hindustan Copper stock, which would be traded at 40, 45, immediately rises to 600, 650 rupees. And slight change in the copper pricing, it comes down and falls to 100. How many people would even be able to disinvest at the highs of 600, 650? Because by the time the stock has given up, the newspaper article coming that copper is now in a bear run, there is already a time gap between the copper falling and the stock falling. And people would have missed it because they have not looked into copper by itself. Now here, the second part of our topic, which is international stocks. Now, this is the reason why I believe that if you find a commodity in a bull run or a bear run, it is necessary sometimes or most of the times to even look at stocks beyond the Indian borders. The reason is that India may not have the diversity which one requires in a particular sector. Now, where copper is concerned, if I look abroad, I can name more than 25 companies where I would start investing my money and have a pure copper play without any management issues. Because some of these companies, if you look at it from 2014 to 2021, companies like Freeport, McCormick, BHP Billiton, Rio Tinto, Whale, which are direct copper miners, these companies have nearly increased by 15 to 18 times on an average. And this kind of return in a high liquidity game is always beneficial. Similarly, if I am now, we are sticking to the same EV sector. If I am looking at lithium, I will not find a single lithium miner in India. I will have to go beyond. And once I have gone beyond, we have many companies, small caps, mid caps, some of the blue chips, and these stocks have already increased by 5 times. And I'm sure they have a much brighter future. Now, the reason why I'm talking this way is because if we pick up any sector, like for example, gold, Indians have a obsession towards gold. Now, everybody cannot keep on buying physical gold at every price, but we do have an alternative where stock market is concerned. Now, unfortunately, again in India, the Hutti gold mines are owned completely by the government and not listed. And the other company which everybody talks about is the Deccan gold mines, which from 15 years has been prospecting. Everybody says it has a potential, but they've never commercialized it till now. Again, going beyond the borders of India, from South Africa to Canada to Mexico to Australia, we have got various companies that are listed. And all these companies, when gold moved from $1,100 to current price of $1,700, these companies have tripled. Now, the advantage is always there of maintaining a portfolio between domestic and international scripts, have good value plays, have good growth stocks. And the future, never think in terms of defensive stocks because we don't require it now. In the coming decade, the sectors, all the sectors are going to be moving in such a manner that we need to distinguish between value and growth rather than defensive and value plays. The defensive plays only comes in when we are going to look at some kind of a bear run, which I don't see in this current decade. Now, I apologize that I may not be maintaining a proper sequence because I'm not speaking from a written down script or anything. I am just speaking out of my mind. And I want to try and give to all the people attending the maximum what I have in my mind in the coming few minutes. Also, even if crude oil, because where India is concerned, net importers of crude oil prices remaining high, always there is a problem because it immediately affects our own forex reserves, our own import bills and everything. And there is always an issue. Now, again, with crude oil prices going up, people start looking into, let's buy ONGC, Oil India, maybe into some of the refineries, HP, BP and all. But again, the problem is that all these companies are public sector enterprises. Government is controlling them. A lot of subsidies are given from these companies, and the companies cannot make their true potential on the earnings. Once again, where this sector is also concerned, why not look beyond boundaries? I mean, we have, everybody knows about Chevron, Exxon, and there are various other companies like Petrobras and everything, where whenever the oil prices make a slight move of $1, $2, these companies start jumping up 20% and 30%. It would be much better that to have a globally diversified portfolio rather than just hunting down smaller companies in India and having trouble where the liquidity is concerned, because some of these small caps, mid caps have got huge liquidity problems, which you may not face it in international markets. Because even a small company, a small cap would be having a liquidity of nearly 5 or 6 million shares a day. Always take advantage of it. Now, everyday life has given us some of the sectors which we look into but never think of investing. For example, during pandemic, e-commerce accentuated itself. Now, once again, we never had proper companies to invest into and take advantage of it. Now we do have Zomato, which came out with an IPO recently, but still it is trying to find its own footing also. Otherwise, Flipkart and all not listed, everything is indirect. Once again, this was one of the sectors which gave me the maximum benefit in the last 5 to 6 years. In the year 2014, I had completed the analysis of the e-commerce sector, and I knew that the next 20-25 years are going to be dedicated to this sector where I can make the maximum. I picked up 5 e-commerce companies from across the world. Unfortunately, none were there in India at that time. And believe me, from 2014 to 2020, these 5 companies in combination have given me a return of 20 times. The worst performer in this group of 5 companies was Amazon, which only tripled. Now, if we are getting an advantage of such huge companies with big liquidity, and we can approach them sitting in India, why not take advantage of such companies? And now with the current LRS schemes, even there are good Indian brokers also who have tied up with international brokers, and everything is available at the click of a button sitting in India. Not much of documentations and everything required. And I feel that this is how one should approach all the markets. Before taking this stuff into another direction, I think let me open myself up to some of the questions. And in fact, if some of the questions are such, let me build up my speech in that direction also. Forum is open.
I think, Mr. Kushal, we have one very interesting question which I would like to pose to you. You said that you are very much bullish, and for the next 10 years, you don't see a bear cycle. What are the key drivers that makes you so bullish for the next decade?
The statement that I made in the starting, that high tech or the new economy, which we call, and the old economy are now complementing and supplementing each other. Now, if you look at the current phase, there are a lot of computers manufacturers, as well as a lot of electric vehicle manufacturers whose manufacturing has stopped because of chip shortages. Now, the chip shortage is because of lithium mining. The supply is not coming in as much as required. Where even copper mining is concerned, there used to be a problem a couple of months back in Brazil where there was a huge flood and Whale had to stop its copper mines. Now, what happened was no supply, no refining, no chips being manufactured, no electric vehicles being produced. Now, the cycle is such that every industry is now benefiting itself in some way or the other. And every industry now requires another industry to see to it that their business is running as usual and the earnings have to be maximized. So due to which I do not see any bear cycle for the coming 10 years. Now, let me colloquially say that corrections can come in the market, which could be due to some geopolitical reasons, our internal politics, or some other situations that may arise. But I do not see any correction of more than 10 to 15% in the markets on the whole. If such a thing happens and people start saying that we will not have a V-shaped recovery and all that, I will not believe in that. I think that is the time you should jump into it. See, most 90% of the investors are bullish. And there is always a bull market in existence somewhere in the world. We do not need to just stick to India. We can move our money wherever we want. All right. Like, for example, we are seeing a major bull run in India. Everybody is ecstatic about it. But we have to look at it that India is still only the fifth in the rise. In fact, a person, if he had purchased the Vietnam index, he would have made more money than anything else. So it is, people need to do a little bit of more research. All the articles of such economies do come in the newspapers. It's just read between the lines for further analysis that is required.
Yeah, no, it's music to our ears to hear that you are bullish for the complete 1 decade, and then that gives a lot of encouragement. The next question, Mr. Kushal, is that you advised that there are benefits of international investing, going to global markets. It gives a wider selection ability, a better array of companies. If one has to look at it from the other side, isn't there exposure to foreign currency variations, geopolitical risks, and some of the other unknowns as well? And how do you counterbalance these risks?
All right. Number one, in 1996, when I started investing, trading and investing commodities as well as stocks, everybody used to say there is a dollar fluctuation or a dollar volatility that can create a problem. I have only one question. From 1996 till now, where has dollar created a problem if we are investing in stocks abroad? In fact, when you will be selling them, you'll be bringing in more money back. And the cycle is this only. All the currencies of the world have kept on debasing themselves as years have passed by. And investing anywhere, wherever there is benefit. See, my base has always been, whenever I am analyzing a company with my team, I have only one criteria in my mind. Is the stock going to give me 5 times in 3 years? If not, I am not interested. Otherwise, I'm happy doing my commodity futures, because if a commodity increases 2 times, I would have already made 4 times on margin trading. So why do I go and invest in stocks? But the situation has been very different. In the last 11 years, the stock markets, the kind of returns which most of the scripts have given, which have been analyzed properly, has been mind-boggling. Even I never used to give credit to Netflix, but when pandemic struck, on the basis of India's subscription rising, I said, let me just buy Netflix and see what happens. And in fact, Netflix increased by $225, where $125 was contributed by India only. A script doubled in 8 months. And that kind of a giant.
True. And for the beginners into international equity investing, what's the approach that you would recommend? Should it piggy bank on a mutual fund, or should there be a direct investment off the cuff as you did for Netflix?
See, I believe all mutual funds are again run by humans only. They are also analyzing. Why not? If a person belongs to the field of finance, why not analyze the stuff yourself? That will always be advantageous. For example, there is an ETF, an internationally acclaimed ETF on FANG stocks, the Facebook, Amazon, Netflix, Google. Now, the question is that ETF has only increased 1.5 times in the last 6 years, whereas individually the stocks have gone 3 times. And sometimes you don't even have to use your mind. If you ask me Amazon today at $3,200, yes, I would like to buy. It falls by $500, yes, I would like to buy. Because everybody is looking at Amazon with only one vertical, which is e-commerce, but they have 3 other verticals, which if a person opens the financials of Amazon, one can easily see that this company is actually divided into 5 verticals. and the valuation of each vertical as it keeps on coming in, the company may be much, much higher in the coming 5 years than it is today.
Yeah, absolutely. I think apart from direct investment through the brokerage houses that you suggested for investing overseas, are there any direct platforms available? And which do you think is the most efficient, effective, cost-efficient platform to work on?
I think most of the people who are in touch with me use Kotak in India, which is, I think, I think they've tied up with interactive platforms. If I'm not mistaken, I don't know if anybody from Kotak is here, but they can clarify that. And that platform is performing very well. I think it is very user-friendly platform. And there are people who directly also go on to interactive, because interactive is a platform available universally. I think with just your PAN and Aadhaar card, one can just open it up. And after that, it's the normal transfer of funds in the usual LRS schemes where nobody finds any difficulties.
Understood. Moving the needle a bit to a different asset class on cryptocurrency. And we have 3 or 4 questions in the question bank on cryptocurrency. The first question comes to mind, Mr. Kushal, is it an investment class by definition? Because it's just a currency. What is your take on that?
I would rather say it is an asset class by itself. See, cryptos, you have more than 8,000 plus cryptos, but let's stick to the top 50 ones of them. Each and every one of them have a role to play on its own. Now, if you ask me that from a crypto that could compete with gold, I would say Bitcoin can compete with gold easily. All right. If you look at the returns which Bitcoin versus gold has given, gold is nowhere. And these are I would say these are the projects that eventually we have to accept, because they all come as a blockchain technology. And every app that we are running has got some blockchain technology to it. These particular projects are tokens of these blockchain technology where a value has been put to it. A simple example, if I can give you on the importance of these, is currently when we transfer funds from the bank abroad, everybody has a SWIFT code. We use the SWIFT technology. Now, a SWIFT technology is nothing but it's a messaging service from your bank to the central bank. The central bank is sending it to the other country's central bank, and the message is given to the local bank of that particular city, and the amount is credited, debited as a journal entry. We are the ones who understand that very nicely. Now, the new last 5 years, we have been seeing a new transfer of funds, which is the instant one, which is there, where which in just a couple of seconds it moves out, because globally also we have these kind of systems called Zelle and everything. Now, what happens is these are actually run by a particular crypto. Then only it can move this fast. SWIFT cannot move this fast because it is a messaging service and it is not a direct transfer of the funds. But a crypto is easily leading you into a direct transfer of the fund. So the actual asset itself is moving. The competing cryptos for that system are basically the Ripple and the Stellar. Some of the people may be aware of those two, because the valuations also have run very high of these cryptos. And see, some of these cryptos are also moving into the gaming industry. You have the non-fungible tokens also. You are soon going to have, even the bond market may face issues, because everybody cannot trade the bond market. It is a game for the institutions only. Retail is never there in it. Now, and the bond market has never given those kind of returns. It has become more a play for the institutions, the banks, and country-specific plays. So
Yeah.
why not an asset class where every individual can participate without having a minimum ticket size?
Sure. And then, Mr. Kushal, how does one actually go about, let's say, if I'm keen to invest and buy 2 Bitcoins, what is the process? Do I need to go on CoinSwitch? What's the best way to get exposure
so
to that asset class?
just as you have brokers, these are also the brokers or the platforms which are available. India has got a couple of platforms. In fact, over here, I would like to, I think you all have had a session where Nishit Desai has taken a panel discussion. Now, unfortunately, one of my associates was supposed to be moderating that, but her grandmother had expired. So her name is Ritusha. And now she is one person who is an expert in Indian cryptos. And the way she is coming out with her advisories to the clients and everything, because some of these platforms are pretty customized to some sections of the people who are looking into it. And a person needs to at least initially take some guidance for their comfort level to understand how to go about with it, because it would not be good to just keep on opening all the platforms that are coming in, because at present on my first count, I have 11 platforms in India, and each and every platform have got different cryptos. Some may be overlapping, but otherwise they are very distinct. And a person needs to understand the economics and the DNA of each crypto, just as we are trying to understand whether we want to buy a steel stock and which steel stock do I want to enter into. In a similar way, we need to even analyze which cryptos we are comfortable with, on what we are projecting the valuation of it. So a little bit of guidance is required by the beginners, and after that, they can develop their own skill sets.
Understood. Very helpful. One question again on crypto, Mr. Kushal, is the question that if there are more miners for crypto with a wider reach, do you foresee a fall in valuation of cryptos, or it will even out in market forces?
See, being an asset class in an initial stage and facing a lot of stonewalling from various central banks and the governments of various countries, the volatility is going to be very high to begin with. But just like people follow SIP, okay, on the 1st of every month or the 5th of every month, let me buy something of 5,000 rupees, sticking to one crypto, which has a very good prospect in the future. A person can start doing the same thing and keep on analyzing the crypto itself. There are various websites also which are available where a lot of news comes, just like a person is following CNBC or the moneycontrol.com. So there are other websites also connected with all these crypto and digital assets, and a person can keep himself abreasted with all the news.
Right. Moving again to the next topic on commodities, and quite a few questions are there on very specific view that you have on A, gold, and B, steel. And we are getting into actionable insights from you on these two commodities.
Fair enough. Steel, I'm expecting stability, not much of a fall. I think in the next couple of months, maybe a rise of 7 to 9% in steel. The reason being very clear is the demand for stainless steel and galvanized steel and specialty steel with the new technology is on a continuous basis. So we may not see a major fall in the steel prices. It will be more of stability to bullishness. And some of the steel companies can earn very good money, provided they are into specialty and galvanized.
And your views on gold?
I am heavily bullish on gold for the coming 5 to 6 years. The reason being is countries not only have to adjust to the foreign currency fluctuations, but also they will have to adjust to the crypto investments, because gold has to fight on two fronts now.
I will sneak in one more commodity based on the question, which is silver.
Personally, I'm extremely bullish on silver. I feel silver will outperform as all the commodities, I feel, in the coming 5 years. I will not be surprised if silver becomes 3 times from here.
Wonderful. So that's the answer to all the listeners. Mr. Kushal, going to the next bucket around IPOs. And we've generally seen that IPOs are cyclical in nature. You have a bunch of IPOs that come and then there is a lull. Currently, the flavor of IPOs that we are seeing in the Indian market is driven by maybe liquidity, IPO funding, etc. But how do you see this IPO cycle or primary markets over the next 6 months to 1 year?
Extremely good. In fact, that also is an automatic answer to one of your questions about the corrections in the stock market, because I think in the next 6 months, we are going to have IPOs which are going to be valued at nearly 300,000 crores. So people will have to remove some money from the mid caps. And that is the reason why mid caps may be a little volatile. People may find any other reason for the markets to fall, but actually it is going to be this. And we are going to have some real good IPOs coming in, particularly from the fintech sector and some of the e-commerce sectors. There is a biotech. There are a couple of biotech IPOs also which are coming in. Logistic IPOs are coming in. And some of these companies are really good. I mean, I'm not saying that in the euphoria where they get listed at a hyperinflationary price, but one can just wait for them to even warm down a little bit and then start investing in them. But yes, the IPOs are going to be good. And in fact, these are going to be real good companies coming.
Yeah. And what's your take specifically on the IPOs of, let's say, loss-making but high-growth startup entities like Zomato? What's your take on those IPO candidates?
See, till a proper competition does not come and eat into their market share, these are the companies which will be growing. Now, these companies having a loss-based balance sheet should not affect us, because see, we've always been used to seeing the profit after tax and calculating the earnings per share on those bases. But if a company is having a very good capital appreciation growth rate of more than 20%, and some of these companies are registering 40% in the coming 3 years, then automatically the market share and the valuation of these companies are going to rise. Eventually, slowly, these companies from loss-making will become profit-making. Now, giving you the prime example of Amazon, Amazon became profitable company just 3 years ago. Now, if somebody had looked into the growth story of Amazon in the year 2004, 2005, when they were giving just, it had come as a seed investment in private equity, if anybody wanted the shares, there were many people who bought 50 and 100 shares, which were available at $10. The IPO was at $250. And if somebody had just held on to it, that's more than enough. It's your retirement money.
Yeah, I think maybe to some extent the uncertainty or problem arises also in terms of how do you value some of these stocks which don't have black and white bean counter type numbers that are flashed. And how do you look at valuing some of these companies where there is uncertainty?
Okay, so basically there are a couple of things that I follow, but the two most important stuff is the top line growth of these companies, the market share that they are likely going to have increase or fall, because that becomes very important for me, and not PAT, but EBITDA. Because that is the point where you actually know how the operating profits are going to move. And that is more than enough.
Okay, so we'll have to look at maybe different metrics in the overall P&L, or maybe even beyond P&L into GMVs and some of those concepts.
Absolutely. See, we have to go beyond the financial sometimes and try and understand what is the objective of this company, how the management is moving. And most of these companies have become global companies. Like, okay, from an international perspective, if I have to look at, see, in India, we are having a little bit of a protection-based policies. So a lot of companies cannot move into the country, and our companies, if they have to move out, we face a lot of difficulties because we do not have the economies of large-scale operations. But if I am looking at it, let's say today, if I'm sitting here in USA, and I talk to many investors out here who are absolutely US focused, and in the year, let me put it, a couple of years ago, we were discussing Amazon itself. And they said that now Amazon cannot rise much. It's captured most of the American market. We are selling off our Amazon. They were getting out of Amazon at $900. And I was the one to tell them, see, I have been a globetrotter. I know how Amazon is increasing its footage in most of the other countries, which you all are not even aware of. And this is a company which is not going to stop growing. Today, they are repenting it because it's already 3 times from the price at which they have sold, because they were convinced that in America, they had reached a saturation point. So similarly, there are going to be times coming in where Indian companies are also will be making a global entry. And we will have to look into those two in a very different perspective.
Yes, I think point well taken for some of these high growth new economy stocks. But of late, we have been seeing that the enthusiasm is also rubbing off on old economy stocks, where we have P ratios upwards of 70s and 80s as well. In some of, let's say, the IT services companies or specialty chemical companies. Is this a also ran phenomena, or there is something more that we need to look at beyond P ratio, even in such kind of companies?
If the company has a very good potential of moving into artificial intelligence, if it's a fintech company, a company giving very good back support to some of the leading technological companies, even a small company running the computer systems of electric vehicles. So these kind of companies, if they are on an expansion spree, getting in more and more clients, domestic as well as international, if such companies have a high P ratios, it is justified. Because the company is eventually going to have their top line growing at a very, very fast pace. So the P ratios eventually will adjust itself and balance it out. But if a company you feel is hitting barriers and obstacles in its growth, then the high P ratio, as we normally say, can become the Waterloo of the companies.
Perfect. And if we talk about sector specific, which are the sectors that you see or you are bullish over the upcoming 2 years, 3 year cycle?
Rare earth metals, because that is what is required for advanced mobile phones, which will be coming in, advanced home systems, advanced communications, advanced logistics. So all these requires rare earth metals to go on with. So some of these companies are going to outperform, because most of the rare earth metals, we cannot invest in them directly. They do not have a commodity market officially. So what happens is we have to go through the mining companies and the stocks and the companies refining these and giving it to the processors. So these are the plays which I feel are going to be very prospectively making you rich. The base metals also will be very stable. They might face some corrective phases wherein if their prices go beyond a certain extent for the users who cannot take advantage of the cost benefits, then yes, there are going to be heavy corrections in them. So, but overall, yes, these people are going to make a lot of money. Natural gas is going to be another commodity after silver, which I'm expecting it to be a very good play, because if fossil fuels are to be replaced, we cannot shift directly from the crude oil to electric vehicles at a fast pace. We require 15, 20 years for that. Now, in between that phase, you will have a lot of industries which will be moving towards liquefied natural gas or LNG, which is much more cleaner than using naphtha and benzene and butane from crude oil. So natural gas itself is going to be on a bullish cycle, as well as the companies which are producing natural gas and supplying it will be at an advantageous position.
Interesting. There's one slightly different question, but it will give good insights to the listeners. Can you share some of the bad calls or some of the decisions that you think you should have done differently? And what experience have you learned from that?
Very bad experiences. And I have lost money, which even has affected my net worth in some of the period. For example, in the year 2010, 2011, I was extremely bearish on copper. And the reason I used to say at that particular point of time was that when everything has become wireless, most places, even desktop computers are not being used. It's become laptops. There are many people who have moved on to tabs. Even mobile phones are now being charged wireless. Now, if this is what it is, then the last mile of copper that is required is not there, which itself, if somebody looks into the statistics, that is 27% of the demand of copper was vanishing. And at that time, copper was running at highs of close to $10,000 and everything. Now, that was the point of time I felt, why not short copper big time and sit with it, because this is the end of this metal. And that is exactly what I did. I was minting money for the coming 4 or 5 years, because every year copper used to straight away give me 15% flat. So on a leverage basis, I was doubling my money every year. Let me put it that way. Then came the electric vehicle technology. Tesla was born in a very big way. And my analysis itself told me that EVs do not require that much of copper, or they do require a lot of copper, but it is not enough to balance the scale of the 27% which has been lost due to the computer technology. And I was sitting happily with it. And then suddenly copper bottomed out. Me and my research team were scratching our heads that where is copper going suddenly? Where there is, I can't see any industry which is buying into copper. Finally, I lost whatever benefits I had over the 4 years. I did keep back a little bit of profits, but that was too minuscule to even run my expenses. And when I was traveling abroad in one of the conferences where I was discussing this with a mining expert about copper, and he's telling me that, Kushal, with your kind of knowledge, you don't know where copper is going. I said, no, I don't know where it is disappearing. Because you are only talking about electric vehicles and they don't require much of copper. But what about the charging stations that require all the copper?
Yeah.
And that was what never struck me, because each charging station requires a huge tonnage. And the changes that you have to do from the grid to the charging station also requires a lot of copper connections. And of course, my opinion of copper immediately changed. There was a new analysis done. So yes, I have suffered losses. I have suffered a lot of losses, even in commodities which have been very domestic in nature. I mean, I have no embarrassment in saying that one of the commodities that I was trained in, which was castor seed, on the physical and the future side, in fact, that commodity itself, I could not recognize one fine day and how it moved, and I lost huge amounts of money in it.
Yeah. One question that comes from Ankit is, what would you suggest in terms of reading material for beginners? And what do you read to develop such forward-looking thought process?
Is this sector specific question or it is a general psychological question?
I think the first one is if there are any good investing related reading materials, then it is relating to investment. And the second is, I think, sector specific going forward and looking in future.
See, all my base research comes from newspapers only. Me and my team, we usually read more than 40 newspapers a day. We have, I mean, obviously, that also includes a lot of international newspapers. See, good editorials, good articles do keep coming of people who are far-sighted in nature. And we do take a note of it and start reading between the lines about it. So for a beginner, I can say this is what it is. All right. Something which may be surprising to this forum is our regional language newspapers, particularly Hindi newspapers, which are very much commodity based and stock market based, some of them, they have much better information than the English newspapers, because they can touch whatever is happening in rural India, which is 70% of our country. So whatever trend changes are taking place over there is how you can decide how even the stock markets are going to move, because the consumption sector is them only. From clothing to capital goods to latest technologies, everything is being gulped down by the rural sector.
Sure. So keeping your ears to the floor and identifying
Absolutely.
symptoms and signals seems to be the way forward. We have one very specific question on what about potash as a commodity? Do you track that? How do you see it?
I do track that. Okay, so potash from the fertilizer side and the chemical side of it, a lot of stability on the pricing front. But one has to make a note that the current pollution levels across the world are so high that the usage of potash in the fields have come down to some extent, because you require a lot of natural micronutrient fertilizers now, and the demand of them is much higher. And if the agricultural policies are moving more towards organic and building larger and larger greenhouses across the world, the demand for potash from the agricultural side may be affected significantly. But this call has to be taken every 2 years, because this is a commodity where the cycle is fluctuating very fast.
Sure. A related question to gold is ETF a good mode to invest into gold, or should it be direct investment?
Always prefer direct investment, because the physical asset is in your hands. See, there have been a couple of ETFs across the world which have suddenly vanished because they could not manage the show, or they always claim that we are taking the money and equivalently we are buying gold and putting it in the warehouse, where the audits are not done properly. How are you assured that they are actually buying the gold and keeping it? So, these ETFs tend to underperform the actual gold. On the other side, see, me being from the commodity front, I always prefer to be directly into the commodities if one can analyze it properly. And if one can analyze it properly, then why not gold futures itself? You do have mini contracts and micro contracts also running in our exchanges, one can even take advantage of that and multiply your returns.
Yeah, just that we'll need to keep on doing that upon expiry. But yeah, that's part of that future journey.
But even in the futures, in the stock market, we also, if we like a good stock, we keep on rolling it over. So the commodities also, you keep on rolling it over if you're comfortable with it.
Interesting. There's one more theme of discussion and the questions around on ESG, which is environment, society and governance, and ESG investing linked to that. Do you see that this is more of a face saver, or if there is really any kind of money behind ESG funds?
I agree with you. It's a more of a face saving exercise only, because eventually if the company is not able to make money and ESG is eating into their costs, the policies of the company is going to change. And even where governments are concerned, if I talk from an environmental perspective on the whole, let's take the example of Brazil. The Amazon forest is it has 1/3 of the forest cover of the world. And it is the only place above which the ozone is not depleted, and it helps in maintaining the oxygen balance. But the new president of Brazil came up with the stuff that we require money, we require our agricultural products to be produced more and exported, and a lot of Amazon forest was cut down for soybean plantations. And this was done 2 years ago. And in the current 2 years, Brazil is facing the worst drought ever. So eventually, even the policies become money oriented.
True.
Whether it's the company, whether it's the individual, whether it's the country.
Yeah. Shifting gears, Mr. Kushal, the next asset class is real estate. And the COVID pandemic has affected and changed dynamics of real estate, especially commercial real estate. How do you see real estate as a investing class, especially in India, as most of our listeners are from India?
Usually it is said that when the stock markets are on the rise, the real estate also will be benefited. But I think that will not happen this time. The hybrid work from home, work from office culture is going to be there in quite a few companies. Let's say the pandemic completely disappears, we are back to normal life, maybe after a year or year and a half. Still, I think companies will prefer that some of the employees can still work from home. Now, what this is going to result is that everybody will not be moving towards the cities. You will also have the rural places or the tier 2, tier 3 towns being developed. So that because these people want to stay there and keep on working, and once a month just come down to the head office or the central office and meet up with the management. Now, if that is the concept that is going to start, because that is what I have started seeing in Scandinavian countries, and after which what has happened is the urban real estate goes down by 10%, the rural estate prices come up by 5 to 7%, and there is a kind of a balance that gets maintained. So if somebody wants to invest in real estate and make a lot of money, it's not going to happen.
And does that analogy also apply to REITs as an investment avenue? Real estate investment trusts?
Of course, unless and until the REITs are going to have a kind of a bottom-up approach of picking up the land and developing the stuff, then yes, they may have an advantage where their earnings are concerned, because they will be flexible enough in as the project moves ahead. But if somebody has to, like if I'm looking at across the board asset classes, real estate would be amongst the lower band ones.
Understood. Very helpful. One more question, Mr. Kushal, is with the big boys like Tata, Reliance, RPG coming into e-commerce with Tata with 1mg and Jio, Future Retail, etc. Is it maybe a hyper competition now with money bags also coming in, and does that affect the overall valuation and the ecosystem?
See, the market is very huge for everybody to have their own market share. It will be eventually who is giving a one-up service. And down the road, I'm sure there are going to be a lot of mergers and acquisitions happening. The stronger will be eating into the weaker, or the two strong ones may come together to defeat another strong one. This is going to be the order of the day. That is happening in all kinds of industries just now. I mean, this is not just with the e-commerce place, but it is even happening in the metals and mining sector. So yes, everybody has got a growth prospect. We just need to see what kind of, I would say, what kind of demographics they are appealing to.
There is also a general sense around the startups valuation being more passing the parcels happening between PE funds, and essentially it being more driven by exit and exit valuations rather than inherent intrinsic value. How do you see that as panning out, or there's some frauds there in the valuation on account of that?
By private equity funds, you are talking about the private equity market that is running?
The VC funds, yeah.
Okay, so the VC funds do have an advantage of obviously picking up some of the companies which at a nascent stage, which are going to be on a high valuation front in the future. But I still feel the policies have to be such that these companies should be allowed to come into the open market easily. Because most of these companies, sometimes they do not have enough capital to market themselves to the public, as well as sometimes the people also do not understand the potential of these companies that they can rush into it. And the VC funds by themselves, they are only working out exit strategies for these companies in terms of IPOs so that they can disinvest at a very, very high price. But they market it in such a manner that people get attracted to them.
Yeah.
So I do feel there has to be some kind of a minor regulation to make these companies more open and not to rely just on VC funds to market these companies. Because then we always start talking XYZ VC fund is involved in it, hence it's a good company. Let's go blindly with it. That should not be the case.
Yes, it's like a Shah Rukh Khan movie, right? If he's there, then it's bound to be a hit in that sense, but doesn't turn out to be always.
But anyways, his last three movies were a flop. So that is also what happens.
Yeah. You spoke about cryptos and fintech, Mr. Kushal. How do you see this affecting private banks or these large nationalized banks? We are seeing some of the beaten down stocks in the PSU banks, but is this affecting the entire banking ecosystem and valuations thereon?
Okay, so is this a question directly connected with the banking sector?
Yes.
Are we looking at straight on with the banks?
Yeah. So the question is, private banks worth investing at this level? Or, what do you see in terms of the nationalized banks as well?
See, nationalized banks, if left to by themselves, they would already have been insolvent. It is only the recapitalization from the government and the center that is helping them to stay afloat. All right. And it is the guarantee that we will be paying all the investors, whatever is there. I mean, the depositors and the customers of the bank and everything. But the question is, the policies which the banks follow are not good. We also know that. Some of the policies which RBI also comes out with, sorry to say, they are not growth oriented. They are more inflationary driven, which I think is not proper, because a country like ours with such a huge population where we require a lot of things to move, everything has to be growth oriented only. Inflation can take care of it if the demand supply is matched properly. So from this macro level, if I'm looking at the banks, if the nationalized or the public sector banks are not pulling up their socks to move into high tech, there is going to be a problem. Where private banks are concerned, some of these banks have started offshooting themselves into neo-banking and e-banking, and neo-banking is going to be the next big thing. So because that is what the Generation Z and the millennials will be looking into. Easy banking structure rather than a complicated structure. Because they want everything, even I would say I want everything app-driven. I don't want to even call up a bank RM to discuss a few things. Why not quietly keep on doing everything? And some of these banks have come out with very good neo-banking offshoots. And I am not sure whether their figures are successful or not, but internationally, neo-banking has become a big thing.
Interesting. A slightly different question is, again, going back to commodities, is India's dependency on crude oil. And given the EVs and the things evolving over time in sustainability, what's your take on crude oil going forward, especially from the India's perspective?
See, analytically speaking, because crude oil has to be analyzed from international and geopolitical level, India has no say because we are just mere importers of crude oil. There have been a lot of wrong policies by OPEC and non-OPEC countries due to which crude oil prices are rising. It's not that the supply is not there. But as I always say, that OPEC is nothing but it's a cartel of keeping the prices on the higher side and trying to manipulate the production patterns. The issue is going to be is a country like India as well as China, the faster we move towards electric vehicles, hybrid vehicles, or hydrogen cell driven vehicles, it will be much better for us. Because the faster we move, the prices of these cars also will start coming down. Just now, obviously, they are at a premium, but then your day-to-day cost starts coming down because you don't have to be dependent on crude oil. You only have to be dependent on the power supply. Now, that also opens a very new sector, is that no country has got enough power if all the vehicles start becoming electric. So there are going to be huge power projects also which are going to come into play. If huge power projects are going to come into play, again, it is a demand which is going to be created for infrastructure, cement, steel, everything will be required. So the new economy again is helping the old economy, or both are complementing each other. So whenever a person, see, this is the base that I always come out with. If you are looking at a particular sector, please do the backward and forward integration on the analysis also as what that particular product requires, and let's start analyzing this so that automatically we can analyze the financial numbers also of this company.
And Mr. Kushal, what has been your approach to making an investment decision? Is it generally a top-down approach where you come from the economy sector and then to a stock? Or it is more bottoms up where it is stock management and then leading to a sector?
No, I always look at the industry or the asset class first. First, I analyze the industry itself or the sector itself. After that, I look into which are the countries that are much forward on their regulatory as well as on their policy front on that particular asset class. Then I look into the industry and then the companies. Because I'm still maintaining a very, very international plethora, because there are certain companies which I will never get in India. I will have to go abroad.
Interesting. So it should be a plan, but maybe a B team is also okay, rather than a B plan and a team.
Exactly. So it's just a matrix that you have to keep on adjusting yourself.
Yeah, I think that's pretty much in the public market space, because companies will be of a particular pedigree and with a particular management caliber anyways. And typically in early stage investing, you would do the reverse way by maybe going for a team and maybe even with a B plan. But with the A team, you'll be able to navigate things much better as things evolve.
Of course.
One or rather, the last question where we may want to spend 5-7 minutes with you are some actionable insights. I can't resist but ask this question. That after 3 years when we meet, we can say that yes, Mr. Kushal had told us this sector, and yes, we have made 20x in terms of those investments. So maybe sector specific, if you like stock specific as well, but where do you see yourself as multi-baggers or compoundings coming from?
Okay, I may not go stock specific on this forum because that will not justify the clients who have paid me money to listen to the specific commodities and the stocks which they need to go. But yes, I can come out with the asset classes where there is going to be a huge benefit. Power sector is one, because a lot of power will be required on all fronts. None of the high-tech stuff is going to work without power. So all that. Now, when you're looking at the power sector, everything that goes in setting up a power line, from your steel to your copper wiring to rubber, everything will be required. Companies, electric vehicles also the same situation. The metal frames of all these cars, the tires you require, again, you'll have to look at the rubber side of it. The batteries, it's the most important part of an electric vehicle. So nickel and lithium both are required, and so on. So the stuff is, yes, all these things are going to make a lot of money. Some of the stocks in these sectors have already increased, but they are likely to increase multifold times. Natural gas, I have already mentioned. One should start looking into the gas sector in a big way, because that is the bridge between fossil fuels, particularly crude oil, and the electric generated power supply sources. So LNG is going to fill up the gap, and the longer it takes for the world to move towards electric generated equipments, the longer the natural gas cycle will be. And of course, rare earth metals, the miners, please go across the world. There are beautiful companies which are undervalued as well as growth stocks.
Yeah, you have given us.
The last one, e-commerce, though has increased many, many folds, it still has another 10 to 15 years to go before they can reach a saturation point.
I think you have given us a lot of food for thought to read between the lines in the last sentence, and it's not fair for us to even ask stock specific questions, but we are happy that you could share this guidance, and it's upon us to do our homework, research, and look for opportunities in some of these sectors. I think it has been a very interesting 1 hour, 25 minutes, Mr. Kushal. I thoroughly enjoyed interacting with you, and over to you, Abhay Bhai, Mihir Bhai, for any kind of closing comments with Mr. Kushal. And post that, I just have a couple of announcements to make.
Mihir Bhai, your turn. Mihir Bhai, you can.
Yeah.
If you have any comments, please.
No, I have no comments except for just saying wow, because Kushal Bhai is in US, and that was awesome. Thank you.
Yeah, thank you very much.
Yeah, sorry. Kushal, I have my query also to be addressed. All things you have told about, and all these all the commodities, everything now has been digitized, and there are lots of exchanges which are the platforms where the trading happens. So what is the future of the platforms which are listed now?
Can you be a little more specific?
I may say like MCX, BSE, NSE, these are the platforms which are listed. Similarly, in abroad also, there are many exchanges which are listed. So
okay.
Can you look at the future?
Before you go to the second part of your question, all right, we will need to make a distinction between an exchange and a platform. See, a platform is only going to be tech-driven stuff. Whether it is provided by the exchange or it is provided by the brokers, that is a different issue. But where exchanges are concerned, yes, they are always going to remain, because they are the regulatory bodies of any stocks, any cryptos, or anything, whatever is going to come into play. But where platforms are concerned, yes. Platforms can come and disappear depending on how people like it or they don't like it. Now go to the second part.
No, no. So the future of the exchanges, that's what.
Will always be there.
But do they
Justify the high
justify
valuation?
the valuations, or whether they can come in competition to the commodities valuations?
No, that will not happen because there is always a saturation point where the exchanges are concerned. So at a particular point of time, that is there. Now, where exchanges are concerned, I do not consider them as growth stocks. They are more of defensive plays, and actually they don't find a place in my portfolio.
So thanks, Kushal, and really we enjoyed this time with you of around 75 to 80 minutes, which you have just given us an idea. It was I will say it is a gyan on all the commodities rather, which will in turn lead us to analyze the stocks where these commodities are performing.
Sure.
And accordingly, it should be enriching for all of the participants who have listened to your talk. I will now request Anand to make announcements and also propose a well-deserved vote of thanks.
Yes, thank you, Mr. Kushal, for these wonderful, insightful, actionable thoughts. It's very rare for someone to be so guidance-oriented and open up, rather than just at a very high-level telescopic view. So we are thankful for that. Thank you also for waking up early and joining at 7:30 a.m. Chicago time. Appreciate it. Technology has helped us to have you and your presence in different time zones, sitting in different locations. And we will keep requiring your guidance with future seminars as well. And once again, thank you very much for sparing your time, thoughts, efforts, and appreciate it. Friends, there are these 4 interesting sessions which are lined up in the month of August at the BCS platform. We have the corporate convention, which is starting on 20th of August. It's a 4-day session covering accounting and corporate law aspects. And it's a must attend for practitioners and people in the employment. We have the memorial lecture in memory of late Sri Narayan Verma on 24th of August, where the MCGM, BMC Commissioner, Mr. Iqbal Singh Chahal, is going to speak on Mumbai's COVID pandemic model, something that all of us should be proud of to an extent, and hear him live on 24th of August. On 25th of August, we have Mr. Raj Malik of Reliance Industries coming and speaking on GDP and how do we as chartered accountants interpret the GDP and macroeconomic analysis. Very interesting to hear him as well. And the last session is on forensic investigation, conventional and novel techniques on 27th of August by Chetan Dalal and Mahesh Pathki. So we look forward to having your attendance and presence for these sessions. And thank you very much for joining in today as well. Have a great evening.
Thank you, Kushal.
Thank you.